Hey guys, Clint Williams here with ASP Commercial Group. Wanted to take some time to make a video to talk a little bit about apartment complex investing and the due diligence process that entails, and also the mistakes that could cost you a lot of money or could cause you to overpay for a property. So today I want to talk to you a little bit about the financial due diligence and what you need to do to really understand what certain numbers are and to verify them. One thing I really want to talk about is the taxes, okay? Taxes are very important because they're a fixed expense. They're something that you can count on paying every single year. And so it's actually easier than some people might think to verify this tax information. So when a property owner or a broker sends you the package with the financial information, it's important to make a simple phone call and to verify that the taxes are accurate, because some experience that I had recently on a property package that I was reviewing, it was a 44 unit complex, okay, and the owner had told me or had listed in his line items that the taxes he was paying were $12,000 a year. And so I liked this property. I really wanted to make an offer on it, but I needed to verify that that tax information was accurate. So it was important for me to make a phone call to do that. And you're asking, well, who would you call to verify? Well, in each and every city and state, there is a local assessor's office or a PVA. And this is who assesses and keeps track of the taxes for every single property in that city. And so all you have to do a lot of times is call the PVA or the assessor's office and find out what the owner is paying and what the tax rate is. Okay, so not only can you find out what the owner is paying, but you can find out if the tax rate will change when you buy a property, or if they will reassess that property based on your new purchase. Because a lot of cities or a lot of states will do a reassessment when you purchase the property. So every purchase that is made in that city, it's reassessed at the time of purchase. Now, not every state does this. Sometimes they reassess once a year, once every 5 years, but it's something you need to find out. Okay, so in a real quick way to find out what the accurate taxes are on a property is to call that local assessor or a PVA in that city. And so that's what I decided to do. So when I called them, they told me that the taxes were actually $24,000 a year. And what the owner had told me that he was paying was $12,000 a year. So that is a difference of $12,000. That's double what the owner told me he was paying on the property. So you're saying, well, that's $12,000 additional dollars that you have to pay for every year. Yes, that's true. An additional $12,000 that has to come out of the property's pocket or my pocket, which could be a disaster. You know, if we do not have enough cash flow to pay that $12,000, it could be a real problem there. That's not necessarily the biggest problem. The biggest mistake could be that I'm overpaying for the property. And, well, how do you know? Well, you just decide, or you look at what cap rate you're going to be buying with. And so a lot of times the owner will already have a cap rate assessed with the purchase price. And so for this property, it was an 8% cap rate. And so what I had to do was I had to take that $12,000 and divide it by 8%. And so that would actually give me the amount I would have to deduct from the purchase price to decide what I should be paying for that property. So what I could have been doing was overpaying for this property by $150,000. And you know, when you get that information, and whether it's $5,000 or $10,000, in this case it was $12,000 more than what he actually told me he was paying for the property, or paying what taxes he was actually paying. And so that was a big deal. So not just because of the money that comes out of our pocket to make that additional $12,000 payment every year, but I'm overpaying for this property by $150,000. And so all I did was I simply took that $12,000, divided it by an 8% cap rate, which is a multiple that he is using for his income. He's using an 8 cap. So that's a big deal, okay? You do not want to overpay for a property by $150,000. So it's simply a matter of picking up the phone, making that phone call to get the accurate information. That saved me $150,000 and saved me from purchasing a property that would have, in the end, not developed the way we wanted. So I just wanted to make that quick video to go over this recent experience I had, and to let some of the new investors out there hopefully understand that it's simply a matter of making a phone call when it comes to taxes a lot of times, because most tax assessors and most PVA offices in the city will give you that information. So if you have any questions about the due diligence process in buying multifamily properties, please give me a call or send me an email at asp.clintwilliams@yahoo.com, or give me a call at 270-860-5929, or check us out on our website at aspcommercial.com. Thanks again, and I will be making some more videos in the future just to help out new investors and to help them be better informed. Thanks, guys.